Hello, traders. Good morning, Stelios.
Hello. Where's Ryan? Is he not here today?
Ryan has internet problems, so
Oh,
we are going to kick it off until he's back online.
until he pays his bills. Okay, I got it.
Yeah, I think so, mate. I think you nailed it there. Inflation high. Our providers are all raising prices by 14 to 15%.
Wow.
I mean, it's we can't afford it anymore, mate. We cannot afford it
You
anymore.
know what's really crazy here in Greece? Haven't seen an increase in price in either, landline internet or mobile phones. It's exactly the same as it was, which is weird.
Yeah, but
But maybe it's coming.
we've got our notices rolling in. I've got like 2 notices yesterday from my telephone and internet provider. It's the UK is hiking prices.
Yeah.
Yeah, all
Okay.
right. Let's dig into to a couple of things. The headlines, the news lines are pretty light overnight, right? We've had, of course, the ping pong between Biden, Russia, China. That was on all news wires. China officials are visiting Russia again. This one official called the China and Russia ties solid as a rock. So that is in response to Biden's visit, I trust, to Ukraine and Poland lately. On the other side, there's another headline, another news saying that China is boosting Australian coal imports on hopes for more easing of curbs. It's quite funny that we get this line because we've had a few days ago they said that the Australian boats, ships transporting Chinese coal didn't get into the harbor because of the heavy paperwork, and so we will have to we'll have to follow up this story. At least Australian dollar is completely ignoring the possible positive impact of this, let's call it possibility or opening. So that for that little bit. On over to staying over there. North Korea fired or may fire some ICBM as well and do some nuclear test. Little fat boy is still. He's still throwing the toys out of his pram, and he's keeping the whole area, the whole zone on its toes. Sorry, let me just kill my squawk here. Other news, over to Japan then. Japanese officials are still a bit cautious on what may happen with the new governor. At least today's BOJ's Tamura is one of the board members, said that the wages are going to be key. We heard that already. There is a risk of an inflation overshoot, but then at the same time he said that it's going to be a careful process if anything happens to monetary policy, and that they have to be still very accommodative for the time being. It's slowly heating up over there. We are 2 days away from the UEDA hearings on Friday, so I trust the market is going to be getting a little nervous on everything yen in the upcoming 24-48 hours. So be a bit careful when you have yen positions. We could have some moves that are not necessarily explained by what's happening in the interest rate sphere right now, but just in preparation of those UEDA hearings. Over to, I don't see much on other headlines. Oh yeah, in the UK then, there's been a bit of positive news, or possible positive news on the wage front, saying that the government is in talks with the health industry to suggest 5% wage hikes somewhere down the road. Sterling didn't really react to it. I think it reacted a little bit on beforehand. Today, in turn, sterling, as with the rest of the dollars, sterling is a little bit weaker through the cable. Euro sterling a tad higher, so the market is shrugging that off. As on the other hand, the Northern Ireland deal isn't done yet. Then what else did we see?
We had Putin's speech yesterday, right? Did you catch the
Sorry?
headlines of that? It was
Hey, guys.
hey
Yeah,
Ryan.
hi, Ryan. So what did you say? Hi,
He
welcome,
was
Ryan. What did you say, still?
he was basically, so Putin yesterday he made a big speech, right? And he
Yeah,
was
yeah.
pretty much very defiant. He sticks to his side of the story that the West has provoked everything and that he's just defending, and you know, he put religion and you know, marriage and sex and all that in the whole equation. He's very, very firm with his views. Sorry?
He won't give up. He won't give
up, and it's a year, right, from the start of this war, and he's still going strong. And you know, the way he talks, he even talked about commissioning. You know, we learn from our mistakes. We're going to commission more military forces. Just not giving up at all. You know, you know, there will be eventually a scenario where both sides show it as a win, but at the moment, I don't see it. And we also had comments from Russia and China saying, Russia and China are very close friends, and this is quite worrying because the world is being divided into two big now parts, right? It's basically
exactly. And then we had those lines about other countries getting dragged into the conversation, Iran, Pakistan, and stuff, and South Africa. Yeah, it's still very. How should I say, very dangerous over there. And I think really I don't know whether it's going to change a lot or dramatically everything, but there were lines out that Xi is going to visit Russia soon and talking about some kind of peace process. But then we know what the peace process means in Putin's eyes, and then we know what the peace process means in the Ukrainian eyes, which is now after Biden's visit sealed the support of the whole of the West, right? So this situation is still very, very, very hot and dangerous. So what else was there in the news? Looking through the headlines.
Do you want me to go through it, mate?
Sorry?
Do you want me to go through it?
Yeah, but we've done already a fair bit of it about China, about Japan, the Australian coal. That you want to go through the data?
Yeah, I'll go. Let me have a look. Get myself up and running.
On the UK,
yeah, we've got obviously the RBNZ stuff. Did you say you've done? You did the RBA coal stuff, did you?
We did the RBA coal stuff. We did the Australian coal stuff. We did. I haven't done the data yet. So if you want to take over for the data.
Okay. All right. Well, I've got my list out ready, so I'll just crack into what I've got down, and just stop me if we've been over it. Did you do BOJ's Tamura?
Yep.
Yeah, done him. All right. So we'll start with the RBNZ then, I think.
Yep. Go ahead, mate. Shall I give you the screen?
No, keep. Well, yeah.
Okay. I'm on the screen. I think the people see my data screen, right?
Yeah, exactly.
Yes.
Okay, go ahead.
Right. So obviously the RBNZ, they hiked by the expected 50 BPs. They only in the end paid a bit of lip service to the storms. It was a bit of a hawkish twist as well, a bit like the RBA, where they said that 50 BPs were discussed, as well as 75s are on the table. So again, in a bit of a hawkish slant, we had that from the RBA saying that in their minutes saying that 25 was the hike, but 50 BPs on the table. Well, now the RBNZ are talking 50s and 75s. They agreed that monetary conditions needed to continue to tighten further. There are early signs of price pressures easing, but core consumer price inflation remains too high. Employment is still beyond its maximum sustainable level, and near-term inflation expectations remain elevated. The committee will look through short-term output variations and direct price effects of the slight cyclone damage. Then we moved on to the presser, and Orr and Silk were speaking. Silk said all options remain on the table, including 25, 50 and 75 basis point hikes, but discussions were heavily focused on 50 basis points. Governor Orr said there was very little discussion of 25 pip hikes. So as mentioned there, a little bit on the hawkish side, not that you'd know it from the Kiwi, which was up a bit, but nothing amazing. You were around for that decision?
Yeah, I was around. Very subdued moves, really. Yeah, we had this 30 pip rise in the Kiwi, but that was it. We're back to yesterday's levels. The thing is with that meeting is that me included, I was expecting some kind of a dovish tilt to it, but it didn't materialize. So Kiwi is doing pretty okay. Wouldn't it be versus dollar on the crosses for sure? Aussie Kiwi has dropped outside the wedge and is probably on its way to low 109s, and perhaps even that 108.80 again. But so it's rather on the crosses that we are seeing the move. It's not how shall I say, surprising versus the dollar. And seen the dollar yields are ticking up as well, but yeah, as I said, it was a little more hawkish than I would have expected it. There was nothing really dovish in the statement. So yeah, where I expected Kiwi to come under a bit of pressure, we're back to neutral.
Yeah. Well, let's move on to the Riksbank, and Thedeen said that an extra policy meeting as a result of the January inflation figures is not on the cards. That sounds like he was answering a question there, whether they would move into meeting. So ruling that out. Said it would need to be something exceptional to call an extra policy meeting. The fact that he's getting questioned on that shows the level of angst perhaps over there in Sweden with inflation. And obviously another central bank that's still going guns on hikes. Coming over to Germany, we had some data out, CPI data. Germany IFO business climate as well. That was round about expectations, 91.1 on that versus 91.2 expected, up a bit on the 90.2 prior. The choice comment from the IFO economist said the share of German companies who want to increase prices has fallen. So a bit lower down there. And as Kay's shown you there, we had a lot of the German regional CPI numbers out as well. Bit of a mixed picture. There were a couple that fell, one that went up, and a couple that came in unchanged, or a couple that came in up as well. So a bit of a mixed picture in there. Not really giving us a clue either way. So inflation, we'll have to keep an eye on that for Germany. Still obviously running at high levels anyway. As far as ECB goes, the market has fully priced a 50 pip hike for March for the first time, according to market players. ECB's Lagarde has said that they intend to hike rates by 50 basis points in March. So it's pretty much nailed on what we're getting then. I heard Kay mention the Sunak thing and the pay offer for strikes. So just moving back to yesterday's number and the US and Canadian numbers, I'll give Kay time to scroll up and click the, you got it there? There he is. There goes his mouse. It's going around. So CPI in Canada confirming a dip, coming in a bit softer than expected, perhaps. decent drops there in the core numbers and the other 30 measures they try and use to predict CPI. So things going the right way there. Retail sales were out as well. Bit of a different picture. They matched expectations on the headline number, coming in at 0.5% month on month. But when you strip out the autos, it came in at minus 0.6%. So more the core sales came in much softer. So not particularly a good picture on that front. No real change, I think, for the thoughts from the BOC from that data, apart from the fact that they're right to pause, perhaps. We also got the Philly Fed non-manufacturing, which Kay won't find on his calendar, and because all these years it's never on any calendar. But anyway, it's the Philly Fed services side of things. That came in a bit of an improvement, coming in at 3.2 versus minus 6.5 prior. Again, a bit mixed in the underlying components. New orders 6.2 versus 10.8 prior. Employment 15.9 versus 16.5, so a touch lower there. The wages index and cost benefits 44.2 versus 46.1 prior, so a bit slower in those. Then we got the S&P Global PMI for the US, all three, which you can see there. Again, a bit of a divergence coming in. Manufacturing was higher, but still in contraction. Services moving into expansion. So it seems like the service sector around the globe has done relatively well coming into the new year. Existing home sales was also out, a bit of a small miss there. But what was or may be significant were the prices or the median same sale prices. They came in at 359,000 this month, which is down from 366.9 thousand last month. We have been seeing prices coming off in some of the price components, the Case-Shiller, the FHFA, that sort of thing. We need to keep an eye on those prices, because that could indicate further slowing down in the housing market if prices are coming down. Could be linked to potential affordability issues with the cost of living. Apparently the US consumer is going great guns, so that shouldn't be a problem for house buying, but it's a metric we'll watch closely. And you mentioned the Putin comments. Yeah, the main stuff was, in his address about the war, it's all the US's fault. It's not our fault. We're doing this, we're doing that. A lot of waffle. But what he did do is he suspended the nuclear pact with the US. This is that's New START treaty, and vowed to carry on pushing the war in Ukraine. Then the Kremlin issued comments saying that Russia's main goal is to ensure that nuclear parity continues to be respected. Moscow will continue to comply with quantitative restrictions on nuclear arms. They will continue to notify the US of planned ICBM and SLBM launches. But the decision to suspend the New START treaty can be reversed. And I heard the guys mention the Chinese meeting. Diplomat Wang Yi said that China-Russia relations are solid and will withstand changing international situation. They are due to, or he's due to meet Putin today, so we may get some comments out of that. That's about it I've got from my notes on that. Scribbling around before my internet blew up. So I think hopefully that's got everything covered, but I'm sure the guys will pick up anything I've missed.
I think that's about it, mate.
Yeah. Not. Let's have a look. What we got on the cards today? Not a lot. We've got the NBA housing market index, which we'll keep an eye on. Has been doing relatively well coming into the new year. Had a little bit of a blip last week, so we'll see if that's just a one-off, perhaps. And then obviously market's going to be looking at the Fed minutes later on. They're due out, as we mentioned. Sometimes, or most of the time, they're a bit of a water under the bridge, because we've heard what every Fed member thinks anyway since the FOMC. But you never know. We never say never in this game. So there may be a comment we don't know about that pops up in that. I won't be sitting around for it. I'll tell you that. Yeah, and that's that for the headlines and stuff. So should we have a little look around the prices? Do you want to kick off, Kay?
Yeah, unless you want to show something that you are really looking at. Okay, let me, where are we? We are here. Okay, first things first, euro dollar. Yeah, it's hanging around this trend line here, if we can call that really a trend line. I think the level, the gateway to lower or for a hold and a rebound is going to be around 106. We have seen it a bit weaker, and I think one of the reasons is that we've heard from all the hawks for a good while, and over the past couple of days we've got Panetta and Villeroy, and they look like to have been sent out to calm the nerves a little bit. And Villeroy, surprisingly, he's been quick in changing his view or
his positions.
Yeah, probably went from long euro to short euro. Because he was one of the people until let's say the end of last month calling for yeah, we have to go, and now all of a sudden they are already restrictive at 2.5%. So it's weighing a little bit on the euro and a bit on the euro.
He also said, sorry to interrupt, but that we don't need to raise at every meeting.
Yeah, that's the thing. We don't need to raise, and that he thought that 3.5 to 3.75% pricing of the terminal ECB rate was creating volatility, that the markets were pricing this kind of stuff. So he's definitely weighing a little bit on the euro this morning, if already needed. I mean, the dollar is doing its part, of course, but yeah, we are around here. This is perhaps a bit of a level, but I think really the gateway to those more important, to that more important zone is going to be probably 106 around here. On the top side, now we need to get back above 107 basically, and so unless we start to move above 4% here. I was showing this yesterday, this US 10-year, right? We are hanging around the 61.8% of the drop that we've seen from the highs down to the corrective low. People will take the 4% as a bit of a psychological level. We have seen a top here. We have seen it hanging around here a little bit. But technically, there's not a lot on my book at least, or my picture at least. There's not a lot around 4%. It's just going to be a bit of a psychological zone. And yeah, Stelios and others have already commented on the yields. We may get a bit of a move on the back of the FOMC meeting minutes tonight, but if anything, those will confirm the fact that they are not done yet in the FOMC. The surprise trade will be, or the surprise move would be, that if there's something dovish that hasn't been said by all the commentators, such as we're thinking about the inflation target, but I don't think we're going to have as much as that. But you know, we are traders. We have to be prepared for any eventuality. So never say never. It could be a bit of a mover, but if anything, I think it's going to solidify this 390 and perhaps see a move up to 4%, which should in turn just keep I'm not going to say a solid or hard beat under the dollar, but at least continue this. Just the demand, the underlying demand of the dollar. Cable. So yesterday we saw this spike on the cable, also into the 4 p.m. London fixing. Seems to have been some decent demand going into the fixing, and we came to tag this resistance at 121.40, from where we shied away again. This morning we are trading. We were trading around this other little line. So we are definitely in a range here now. I'm not seeing too much in the technical, at least, picture to take it outside of the ranges. We may hear from more wage talks or Northern Ireland protocol talks, taking this one side or the other. But we've also seen that yields are moving pretty much in tandem with the dollar yield. So I'm rather in a range scenario here on the cable for now. Euro sterling came back to retest the 88.20 this morning. We saw a bit of a dip. I think it's a combination of and it's still on we're back below 88 actually this morning, after the initial blip higher. We're still probably seeing some positiveness in the sterling from those yesterday's PMIs, from perhaps those wage talks, from the Northern Ireland protocol. If a deal would get struck, we may see these get down to the mid 87s, as I was already saying a couple of times. I'm not sure if we're going to get a dip into the real danger zone, but for the time being, I'm not too much of a bull on this one, and I'm just managing the leftovers of my option, which will expire on Friday. Aussie looks breaky. We've had the retest of one of those two trend lines yesterday, and it capped just above 69. And then we started to get to come off again. As I said, the Aussie is not really benefiting a lot from the Chinese coal story, if any. But this morning, we just went to have a look at this prior low 68.12. That seems to be an area where the market is keen to take some profits. I'm a bit short. I did take some off there as well on the way down, but for the time being, for as long as we are staying below this zone, I'm going to try to run this. I have in mind that we could see somewhere in the mid to low 67s on this move at least. I'm not really thinking that 71, 68, three big figures. I don't think there's three big figures there in this move. But okay, never say never. I think if we get down here to those mid 67s, then that should already be a pretty decent move on the break, and then we'll see what happens over there. Kiwi is still trying to make up its mind in this zone. We know that 62 and just below 62, 61.95 is a big level. If it gets down below there, we may see a bit of an acceleration down to mid 61s. Why not even down to around 61 the figure? But after the RBNZ, okay, it's not going up, but I'm a little cautious, and I really don't know whether we should be pushing the envelope if we get down there. It may be, if we get down there due to a strong dollar, it may be a slow grind instead of really a breakdown. But of course, never say never. Let's finish on the currencies. Dollar CAD. So this, we had the break yesterday on those CPI data, and also and on the retail sales, but the retail sales are December numbers, right? We are nearly March. This one broke yesterday. I'm trying. I had a bit of a long on the CPI, and I rebought it on the break and see just if this break holds. It's a very low risk trade, and if it goes back below 135.15, max 135 the figure, I'll be out of there. Very, very low risk trade, but I think there's a chance for this to get back somewhere around 136, and why not come and tickle those highs again around here, providing that the dollar keeps its bid elsewhere. The other reason, this is not only a technical reason, but the other reason is I find that lately McClem has been a little less hawkish than other central bankers may have been. So there's a bit of a fundamental logic as well in this break, I think. So it could take us gradually higher. But as I said, back through 135, the party is over, I think, and then we'll trade something different again. Yeah, Eurocat, I'm staying out of it because I have the same feeling on the euro as the cat for the time being. But we have tagged the 144.40 again very early doors this morning, and we are shying away from it again. So still keep an eye on 144.40.50. What's going on there on the Eurocat? Keep a close eye on that one. If in turn we start to break, then that could be an accelerator for the dollar cat as well. So that's the level to monitor. Yeah, and then the last bit, as I was saying, what happened with the RBNZ really cemented the break of this wedge on the Aussie Kiwi. And I wouldn't rule out over time, since the RBNZ has over 1% higher now. I think Aussie is around 335 and Kiwi 4.75. So that's more than 1% differential on in favor of the Kiwi. That may play on this cross, and why not? We could have a retest of this 108 80-85 zone coming at some stage. It also would not be completely out of line with the width of this, and then we are having what do we have here? 120, 200 MA on the 4 hour. That could be a target as well. Okay, yeah, I'm gonna leave that to somebody else because I'm not trading dollar Swiss brand. Okay, on the NOK side, Euro NOK relatively quiet, but the dollar NOK is slowly coming back to those levels here. If keep close eye on 1035, I'd say on the day. We are seeing oils come off a little bit. We are seeing natural gas come off a little bit, and Norway being an exporter of both. If the dollar continues to be bid, keep a close eye on this one on a close, I'd say. For the rest, yeah, yesterday, Jesus, dollar China, that was a bit of a novice trade then that I did there, right? Yesterday I went out of my dollar China because of those Xi lines. Where were we? We were around, I went out of it here. No, 688.75, around here. But then because she was like mentioning something, or his deputies or his aides were mentioning something about possible pushing for peace talks also, but dollar China didn't benefit from it. Chinese yuan didn't benefit from it at all, and now we are here looking at the resistance. So this is to me a bit of a level here. Not far from where we are in dollar China terms. This is really close, and we have seen it's been a prior high, prior low. 690.75, 691. That's where we should keep an eye on. If this goes, we may continue to push up into the 695 zone, perhaps, on this dollar China. I should be getting back into buy the dips mode on that one for now. The rest, yeah, mix. I'm still in there. It's bumping around. We had a little of a break below 1960.59 yesterday, but couldn't sustain it. We're really sideways. But it has a tough time to rebound as well. Really tough time. I was, as I've been saying a couple of times, I was hoping also to get back to better levels to add to my core shorts, but it's just not happening. So it may be just a slow grind lower, and I still think we are going to reach some of those levels here. But even if not, just hanging around here, it's paying a very good carry still, and I'm not changing a winning team. Still, before I pass the hand over to the screen over to Ryan, would you like to comment on gold or silver or so? Oh, you're still around?
Is he gone?
He might be gone. I don't know.
He's flicking his mute button on and off, so he's probably got problems as well. Everyone's got problems with the internet today.
Yeah. Okay, gold for me is neutral here. See, low 18s and then 1790s, 80s. That's where it's gonna play if we continue to correct. No, we cannot hear you still. So this is to me. I'm going to say it's going.
Hello. 1, 2, 3.
Yeah, there you are.
Ah, okay. If I was
All right. Would
talking
you like to
and
comment on gold and silver? At all?
yeah. I mean, nothing's really changed for me. So it's we're having like a couple of sideways days again. Silver for me is quite simple. 22 and a half really is a main level to the upside. 22 maybe a minor one, 22 and a half a major one, and then 24 and a half. So nothing yet. And on the downside, 21.05 is still my bid there for another quarter position. I have to say, metals traded, and pardon my voice, I have terrible cold and sore throat and nose and it's okay. I have excuse me, I have to say that yesterday's move, price action in metals was very surprising. I expected them to perform a lot worse, with equities selling off, risk off in general, yields going higher. So this is showing some strength. Having said that, I think that if yields continue higher, if 10-year goes, we've broken the highs of 393. So now we're heading towards 4% and then 433. If we get to 433, I think there's no way metals can hold up and not test levels below. So I'm waiting for that, and that's the reason why I'm not doing anything yet. So sideways action at the moment, and driven by yields. The FOMC minutes, I don't think they're gonna throw anything new at us. They obviously didn't have the CPI number before on the meeting on the 1st of February.
Well, they will have known I think they will have known the CPI and the or at least the NFPs.
NFP, yes, it was close, but CPI was 10 days later. So I don't know when do they
perhaps
when do they get these numbers? I don't know, but I think they will not have known the CPI. So if we do get a slight dovish tilt to the meetings, be aware that they didn't. I don't think they will have had CPI and PPI numbers, and in general, numbers have been coming in better than expected over the past couple of weeks. So we have to be aware of that. But overall, very surprisingly good price action for the metals. But I still think there is weakness to come if yields go higher.
Okay. All right. Yeah, I'm actually looking at those mid-20s. I thought with yields on the rise, we could get down there to start to add again, but I think I've been a little bit too conservative. There is a case for silver to hold up and to hold up better if the economic data hold up despite yields going higher. So I think if the data don't start to fall out of bed, I am going to rebuild, and perhaps I'm going to go in various slices, like low 21s, then 20 and a half, and then keep room to add all the way down. Because I think, over time, when we are going to get to a level where we are at the ceiling of the rates, and if by then we are seeing a confirmation of at least a setback in the CPI. I'm not going to say that we are going to go all the way back down to zero, but a setback. This could be there could be a combination setting up to get back into this one, and I'm looking especially at silver. Okay.
And I'm looking. I'm also scaling in slowly. Maybe I was a little bit early with my first quarter, but I'm scaling in pretty much same levels that you have now. So we're in the same boat.
Yeah. Okay. Hey, do you know Simon on our chat is saying like silver March contract rolling over into May contract now, so that is making the noise Tuesday, Thursday. Do you know any impact of this?
It depends which way around the main interest is. If they're short, they're buying it back and shorting May and June. So maybe that's why we're seeing some strength. I don't know.
Yeah, perhaps. Okay. 21.80 versus 22. Yeah, so they will probably buy back and then sell it out again. Okay, Ryan.
Hello.
Do you have anything to show us?
No, I'm gonna.
Okay.
I'm still getting connection problems my end, and stuff's pausing and freezing and God knows what. So unless there's anything in particular people want to show, I'm gonna hold off.
No, I'm just looking through the. I'm just looking through the comments. Yeah, as I was saying, Brian, I think dollar Swiss is okay. Everybody can trade anything, anything you like, but dollar Swiss most of the time is a proxy for the euro dollar, right? And it could be somewhere a slower euro dollar because most of the time euro Swiss will move a little bit with the euro going up and down, but. It's tough for me to to trade a currency where you have a central bank being as involved as it is on the dollar side. I understand pretty much what's going on Euro Swiss, but dollar Swiss I'd rather actually trade euro dollar. But okay, it's just my personal view. So you won't find too many Swiss charts on in my view here. Yeah, just one quickie on the S&P. We are through this 40-30 that we were looking at, and there's a lot of support on different levels coming in there, and I really think that okay, we are trading under 4,000, which is going to be a bit of psychological level. So to me, there's another one here. We are not far from the 50% of this move at 39.80. So that's the next level to watch. And then I've seen a lot of people talk about this level around 3,900, where it's the make or break scenario for this run. But yeah, for the time being, and I'm just going to reiterate what I said. If the market is trading a soft landing, yes, this thing is going to go down if rates really spike higher. And I think we found the inflection point. And the inflection point was when, and we were showing this, and I was showing this 383 on the 10s, where there was traffic before, and it was like the 50%. And as soon as we went above the 50%, S&P started to turn around. So I think that's, if you want to overlay it with yields, that's probably going to be our inflection point as well on the way down, because then we had this correction here, which is exactly what happened when yields hit 390 and then went back to 383. The S&P moved higher, and then we moved higher again in yields, and S&P broke down. So I think there's some logic in what's happening here. But if you trade a soft landing, I'm not sure that equities are really going to crap the bed, other than correlation with yields. So that's just my personal view. I still prefer trading the dollar than really trading short equities, although it's the move is clear and the market is on its toes. Let me see. Ryan, anything else to mention? Anything else you want me to look at, or Stelios?
No, I think you've covered the bulk of it. Yeah, I'm personally I'm just managing some positions. I picked up a little bit of euro sterling, 88.01 yesterday. Just playing the ranges there, letting some go off in the jumps higher towards 20. And adding back in, so a bit of rinse and repeat there. Kay's mentioned $1. That's getting up towards that 690.91 area, which is my next big level for that one there. So looking to see if we get a break of that level up there. Decent resistance area. And I think you also covered the Aussie dollar. We got a bit of a key level down into 68. 67.80, that key 38.2 fib of the October rally higher in the Aussie there. So yeah, it's keep for me. I'm still long the Aussie, and we've made a little potential for a double bottom there. at that prior low 68.11, almost, well, pretty much to the pip. We matched that low from the other week, and that's coming in just ahead of some traffic into the 68 zone. As I say, that's 67.80, the 38.2 fib, going to be a big one, because that's going to be the first test of the October rally, and if we get through there, then we're potentially going to be heading lower. But as you know, I've been bearish this short term for the last couple of weeks, and it's still playing out to the downside. I haven't managed to trade it that way successfully yet, but I'm still in my longs. I'm glad I cut my whole position to half at 70.50 a couple of weeks ago, when I felt it was getting a bit toppy. So I managed to do something right on that one. Apart from that, I think you've covered everything well, Kay and Stel.
Alrighty. Okay, then I guess we are going to
Great.
call it a day then today, right?
Yeah,
Yes.
you can do. Apologies again, folks, for my internet troubles. Typically went 5 minutes before the show started, and then you're running around like a blue ass fly trying to get things plugged in. Hopefully, I'll get everything sorted and back to normal tomorrow.
Alrighty.
Yeah.
Excellent. Thanks, everybody.
Thanks, everybody. Have a good day. Safe trading.
Cheers, all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.